You were told that buying the largest home you could qualify for was the ultimate adult milestone. You were told that a 4-bedroom house in the suburbs was the trophy for a life well lived. But here's the cold, hard truth that nobody in the real estate industry wants to admit. That extra 800 square feet is acting as a ghost room. It is a silent vacuum sucking the life out of your retirement. It drains your social calendar before you even see your paycheck. We are living in an era where the American dream has become a lifestyle filter. Today, your mortgage isn't just a financial instrument, it is a social tax. It is quietly eroding the time, money, and energy you need to be human. By the end of this video for Uncle Median, you'll understand why the top trend for 2025 involves a radical sacrifice of privacy. People are giving up their walls just to maintain a shred of community. If you think your house is an asset, wait until you see how it is liquidating your friendships. Let's count down the 10 ways your mortgage is destroying your social life. Title card. Number 10, the 30% illusion. For decades, the golden rule of personal finance was that you should never spend more than 30% of your income on housing. But as we move into 2025, that threshold has become a distant memory for millions. Currently, 32% of U.S. homeowners are officially classified as house poor. For a massive chunk of the population, that figure is actually north of 50%. When half your paycheck is gone before it hits your bank, the fun money is the first thing to go. We call this the sacrifice of discretionary spending. Data shows that cost-burdened homeowners are 3 times more likely to cut their social budget compared to renters. You aren't just paying for a roof, you're paying with every concert ticket and dinner out you have to decline. This financial suffocation creates an invisible wall between you and your social circle. This leads us directly into the next hidden drain on your wealth. Title card. Number 9. The $20,000 sinkhole. Most people calculate affordability based on the mortgage payment alone, but that is a dangerous game. Between maintenance, taxes, and insurance, the average homeowner pays an additional $20,000 annually just to keep the lights on. This is money that does not build equity. It is a pure exit of capital that could have fueled a vibrant social life. Think about that. $21,000 is enough to fund multiple international trips or a year's worth of high-end social engagement. Instead, it's going into a new HVAC system or rising insurance premiums. This financial drain forces homeowners into a state of perpetual frugality. Now, the simple act of saying yes to a friend's birthday dinner feels like a threat to your stability. While the money is disappearing, something even more valuable is being traded away: your time. Title card. Number 8. The drive until you qualified trap. Because prices in city centers have skyrocketed, first-time buyers are being pushed further and further out into the exurbs. This is the drive until you qualify phenomenon. On paper, you get more house for your money. In reality, you are signing up for a life behind the steering wheel. Homeowners now commute an average of 20 extra minutes per week more than renters. Those minutes are taken directly from your peak social hours. By the time you get home to your spacious palace, you are too exhausted to do anything. You have traded proximity to your friends for an extra bathroom you only use to clean on the weekends. This geographic drift is the first step toward a total social blackout. It only gets worse when you realize how much extra work that house requires. Title card. Number 7. The second job surge. By 2025, the reality of homeownership has forced a massive demographic shift. Roughly 30% of Gen Z homeowners now report taking on a second job just to afford their mortgage. This isn't just about working harder, it is about the total elimination of the weekend. When your Saturdays and Sundays are occupied by side hustles, your social windows disappear. The time you used to spend with family is now spent in the gig economy. You are essentially working for your house, rather than your house working for you. This creates a cycle of exhaustion that makes it impossible to engage with others. Eventually, your neighborhood becomes nothing more than a collection of strangers. You lack the mental bandwidth to even say hello. Title card. Number 6. The death of the third place. Modern suburban developments are increasingly being designed as bed-in communities. These are residential zones engineered for only 2 things: sleeping and parking. They lack what sociologists call third places. These are the cafes, parks, and pubs that facilitate spontaneous social interaction. In these environments, you have to make a planned effort to see another human being. There is no running into a neighbor because there is no corner store. Every social interaction now requires a 15-minute drive and a calendar invite. This design-induced isolation means you have a backyard but no community. You are trapped in a private fortress. The lack of walkable infrastructure ensures your only social life is the one you see through a screen. Title card. Number 5. The interest rate prison. We are currently seeing a massive lock-in effect in the housing market. Because many secured low rates years ago, they feel they can never sell without losing that rate. This has created a state of long-term geographic stagnation. Even if your friends and family move 3 states away, you are stuck. You are financially incentivized to stay in a location that no longer serves your social needs. Moving would mean doubling your interest expense. This turns your home from a sanctuary into a prison of high-interest avoidance. You are sacrificing your support network for the sake of a spreadsheet. This stagnation leads to a specific type of loneliness. It is a quiet isolation that most people are too embarrassed to talk about. Title card. Number 4. The friendship recession research shows a direct correlation between commute times and social capital. People with commutes longer than 30 minutes spend significantly less time visiting with others. Every minute you add to your commute is a minute subtracted from your friendships. We are currently in the middle of a friendship recession. The average person has fewer close confidants than at any point in recent history. The mortgage is the primary driver of this social decay. When you choose a house 45 minutes away from your social hub, you are choosing to end those friendships. The effort of maintaining those bonds becomes too great. Your social circle slowly withers away until you are left with nothing. You're alone with nothing but a high utility-to-debt ratio. Title card. Number 3. The stigma of strain. There. It's a psychological destroyer that comes with mortgage strain. The stigma of failure. Homeowners struggling to make ends meet often feel a deep sense of shame. You don't want to admit you can't afford the lifestyle your house suggests. This leads to a life of concealed isolation. You start declining invitations not because you don't want to go, but because you can't afford the entry fee. You are too proud to say why. Chronic financial stress also triggers de-induced fatigue. Homeowners with high debt stress are twice as likely to report having no energy for social activities. The anxiety makes you feel unworthy of leisure. You become a self-imposed social recluse because you're simply too tired and too ashamed to have friends. Title card. Number 2. The 38-year-old delay. The median age of a first-time homebuyer has hit a record high of 38 to 40 years old. This is a massive shift from previous generations. Why does this matter for your social life? Because people are entering the most demanding phase of homeownership while raising children. This is the double whammy of isolation. In your 20s, you have the energy to socialize despite your housing constraints. By your late 30s, the combined weight of a massive new mortgage and parenthood creates a total social blackout. You no longer have the mobility of your youth. You are now anchored to a property that demands all your remaining resources. This delay means that the prime years for building a community are instead spent in a frantic race to catch up on equity. This leaves many people isolated at the very moment they need support the most. Title card. Number 1. The socialized sacrifice. The most shocking trend of 2025 is how people are finally fighting back, but at a steep cost. To combat the crushing weight of isolation and cost, 22% of Gen Z buyers are now purchasing homes with siblings or friends. Additionally, a record 17% of home purchases are now multi-generational. We are moving back to a communal living model out of necessity. While this increases forced interaction, it often limits your external social mobility and the privacy required for traditional socializing. You are trading your independence for the ability to afford a zip code. The American dream is being rewritten in real time. It is no longer about a private castle for one family. It is now a shared bunker for a group. This shift highlights the ultimate verdict. The mortgage is no longer just a financial instrument. It is a lifestyle filter. By the time people pay off that mortgage, they realize they have sacrificed the social networks the home was intended to host. If you want to right-size your life, start by auditing your utility-to-debt ratio and prioritizing people over square footage. Do this before the ghost room claims your entire social life. Choose your home wisely, or your home will choose your friends for you.